Hello, my dear aspirants. Welcome to Clarity for Show. Today in this session, we will discuss a very important circular published by RBI with respect to strips. All right. So you can see here the circular published by the RBI regarding that, and it has been published in official Gazette of RBI as well on 12th of June 2025. All right, and this circular will be effective from this date only, right? So strip circular will be effective from 12th of June 2025. So what was this circular all about? We will try to understand each and everything. We will try to understand the concept behind these strips and why it has been introduced. All right, what are the eligibility criteria for introducing these strips? All right, everything we will discuss. And it has been introduced for state government securities, means SGS, state government securities. This you need to remember. Earlier we have this strips concept for central government dated securities, but now it is for state government securities as well. You can read out some of the points of circular, the introduction of circular, that State of Development and Regulatory Policies announced on 7th August 2019 to propose to introduce strips or reconstitution facility for state development loans in consultation with respective state governments. And they got the feedback, all right, from the market participants, from the various state governments, and RBI has decided to introduce the strips in state government securities, and this will be an additional strips. We already have central strips over central government dated securities applicable from 1st of April 2010. All right, so this is a new concept for state government securities, strips for state government securities. We already have strips for central government dated securities right from 1st of April 2010. Okay, so this date you can also remember, and this you should remember. All right, now coming to the next slide, let's try to understand what is this all about strips. So strips, as the name suggests, separate trading for registered interest and principal of securities. So here it's a method where you can do the trading separately, right? Separate trading for registered interest and principal of securities refers to the process of dividing a traditional bond. We will also try to understand the difference between traditional bonds and versus strips concept. Okay, that how both are differ. Okay, so process of dividing a traditional bond into its individual interest, that is coupon, where the coupon is a proper interest is provided periodically, and the principal component where you will get the principal amount after the maturity of certain years, right? Allowing them to be traded as separate securities. So one can trade their securities separately either into this mode, the interest coupon mode, or in the principal component mode. All right, so it's a mechanism that allows a single government security, state government security basically, to be broken into its individual cash flows, one for each interest component payment and one for principal, that is face value repayment. तो ये आपको पता है, this is all about the zero coupon bonds concept है ये, है ना? That if the face value of that particular security is ₹1,000, then it will be bought at the discounted price, of 600 suppose, and after the maturity, on the day of maturity, you will get the face value, that is 1,000 rupees. So this is what a zero coupon security means. There is no coupon associated with such type of component in zero coupon bonds or zero coupon securities. No interest will be provided, rather they will get an additional 400 rupees as profit on the day of maturity of that particular security. All right, this is what zero coupon security all about. So each of these components becomes a separate tradable zero coupon security. Strips do not pay interim interest. Instead, they are sold at discount to face value. So it is called zero coupon, right? Discount to face value. Face value is this and discounted value is this. All right. And redeemed at par at the time of maturity. Redeem at par of what? At par of face value. Okay. So zero coupon bond is also the concept of zero, since the term appears here. So in strips, each strip component has both the interest as well as principal components. It becomes a zero coupon bond, means available at discounted price. This means they do not pay periodic interest and instead are purchased at discounted price, and you at the time of maturity you will get a face value of that particular security, means the value of that security. All right, then how it is different from traditional bond? What makes difference between the traditional and the strips? See here, in traditional bond we generally see we need to pay there is a coupon associated, means a regular interest payments will be provided to the bondholders. Bondholders will get a regular interest. In traditional bond, means certain amount of coupon. Coupon is what? The percentage. Suppose the price of the bond is rupees 1000 and the coupon here is 7%. It means you are going to get 70 rupees regularly, right? Regularly you are going to get, means the bondholder is going to get 70 rupees. All right. So this is interest payment coupon. Coupon means interest rate at which it is offered. Then return the principal amount, the face value, to the bondholder at the time of maturity. Means at the time of maturity, this face value will be returned, means 1000 rupees will be returned. Typically sold close to their face value. So there is not very much difference, means if the face value is 1000, then it is sold at rupees close to face value 950 or 975, right? So there is not a huge difference. And here the combination of, it's a combination of interest as well as principal into a single security. Here you are going to get a regular interest at the coupon rate, and at the time of maturity you will get the face value, means the principal value, right? So this is all about traditional bond. Coming to the strips, that is separate trading of registered interest and principal of securities. Here the principal and interest component of the bonds are separated. Here the principal component and the interest component of the bonds are separated and traded as per the requirement of the individual, and it is traded as individual securities, right? So here principal in traditional bond, principal and interest component both are clubbed together. However, in strips both are separate components. You can either choose for the principal component or the interest component. Each components become a zero coupon bonds, means you will receive the security at discounted price, meaning no periodic interest payments. Okay, periodic interest payments आपको नहीं देने मिलेंगे आपको, because it's a zero coupon bond, right? Strips are sold at discount and mature at its face value that we are talking about. Zero coupon bond का ये एक feature है, right? It offers the investors the ability to customize their investment. They can either go for the principal component part, or they can either move to the interest component part. Means investors, a bondholder, a security holder can customize their investment by targeting specific interest payment modes or the principal payment component mode. All right. तो यही डिफरेंस है ट्रेडिशनल और स्ट्रिप्स के. ट्रेडिशनल में क्या है, प्रिंसिपल और इंटरेस्ट कंपोनेंट दोनों क्लब होते हैं, वही है डिस्काउंटेड प्राइस में मिलते हैं, और डिस्काउंटेड प्राइस समवेयर नियर टू द फेस वैल्यू. हाउ इन द स्ट्रिप्स you are not going to get regular periodic interest unlike the traditional bond. However, you will get the you can pay through the interest component or by redeeming the principal at the time of maturity. Means discount value में आपने purchase कर लिया and you will get, suppose आपने 700 में purchase कर लिया और at the time of maturity you are going to get 1000 rupees. All right, ये प्रिंसिपल कंपोनेंट हो गया. और इंटरेस्ट कंपोनेंट में क्या है कि 700 में परचेज किया और आप एवरी मंथ एवरी ईयर, सपोज 10 इयर्स का है, तो यू आर पेइंग 70 रुपीज. 7% अगर ये है एनुअल है इसका कूपन रेट, तो यू आर पेइंग 70 रुपीज फॉर एवरी right, for every year annually. Okay, see here through this example we can understand the diagram. He is offering this bond. Okay, this bond or state government securities, you can say, is specific to that. So government of Maharashtra is offering, having the face value of 1000 rupees, and she is a bondholder. She is a bondholder interested in this particular bond, this security. Okay, so she has two options. Coupon, if she will adopt for the interest component, then the coupon rate is 70% annually, means 70 rupees annually. Okay, Coupon payment dates every year on 1st of April. Every year on 1st of April. This component also you need to remember. Okay. And the security will be split. The security is split into two components, that is the interest component and the principal component. Interest component, 10 separate interest strips of ₹70 each, payable annually by this bondholder, or once you will pay at the discounted price and redeem. So obviously you will get, suppose if you are paying once, okay, for principal strip, then you have to pay like 500 or 600. Okay, and if you will go in this mode, you will have to pay 700 rupees. So there must be some benefit if you are paying once. All right, so this component is also there. A principal strip of 1000 repayable at the end. So it will be repayable at the end to this person, to this bondholder, at the end of the maturity, that is 10 years. Okay, now coming to the next part of the slide, introduction of strips and reconstitution of state government securities. Here you can see this facility is already available for central government dated securities right from 1st of April 2010. Okay, however, this facility will be becomes effective for the state governments and UTs right from 12th of June 2025 to bring more liquidity into the state government securities. To bring more liquidity into the state governments, liquidity will increase in such type of securities by providing the more avenues for the investments, providing more avenues for the bondholders, investors, right? See here, type, eligibility and security type, only fixed coupon securities issued by state government and union territories, right? Residual maturity must be under 14 years, means it should not go beyond 14 years. Outstanding amount minimum 1000 crore, that is 10 billion as on the date of stripping. ये होना चाहिए आउटस्टैंडिंग, इतना अमाउंट का कम से कम रिलीज करना चाहिए स्टेट गवर्नमेंट सिक्योरिटीज on the date of stripping that particular state government. Then SLR eligibility means security must be freely transferable, and SLR stated liquidity ratio conditions जो है it will be eligible for that issuing authority. Okay, securities must be eligible for meeting the SLR, and transferability, securities must be freely transferable. Okay, so these are some of the eligibility conditions for this strips. अब बताइए भाई ऑब्जेक्टिव क्या है, why RBI has announced this strips? What is the objective? What is the objective of state governments? Obviously to enhance the liquidity and credibility in state development loans market, to make it more penetrable. Okay, ठीक है, into the state development loans, to bring more investors in state development loans, because these such type of states usually used to generate the revenues through such type of loans in order to make investment into the long-term projects. All right, to enable the separate trading of registered interest and principal securities for state government securities, just like central government dated securities. Now, eligibility securities that we are talking about, only fixed coupon, residual maturity must be up to 14 years. All right, this point also you need to jot it down over in your notebook. Minimum amount of 1000 crore, that is 10 billion as on the date of stripping. SLR eligibility is there, and securities must be freely transferable. Okay, so these are some points that you should remember with respect to strips. Now, placing of request, how one can place. For market participants with SGL account, one can place the request directly through e-Kuber system of RBI. Okay, you can place the request to buy the state government securities through e-Kuber system that is supported by RBI itself. Okay, and for gilt account holders, जो RBI में already they have accounts, they must route their requests through the custodians maintaining the gilt accounts. Custodians will then place the request on behalf of that individual, that bondholders, in e-Kuber. Okay, so these are the two modes through which you can place the request if you are interested in this strips, if you are interested in such type of state government securities under this strip mechanism, right? Now, nomenclature, sub strips ka they have a unique ISIN, that is International Security Identification Number. It is quite unique code. and the naming convention is being used for central government of strips. Okay. Benefits. क्या है भाई? What are the benefits associated with strips? See here the benefits associated with strips in state government securities. Enhance the liquidity into the market, especially in state development loans market. Facilitates target investment in short as well as long-term cash flows. Used for institutions like insurance companies or pension fund with specific cash flow needs. Increase the price. मतलब cash flow का needs को बढ़ाएगा. Cash flow, it will increase the liquidity. Both are same terms actually. Increase the price discovery and efficiency in bond market. Very important. Means through this mechanism, it will lead to increase the system of price discovery and efficiency into the central state government, state development loans market, that is bond market, state government securities, right? RBI moved to introduce strips in SG aligned with the broader agenda of deepening into the state development loan bond markets. All right. Now uniformity between the central, we have the central dated securities, and now we have state government securities strips, right? Investors can customize as per their need. Means investors are allowed to tailor their investment to their specific need. For instance, an investor seeking regular income might focus on purchasing the interest component, while someone wants a lump sum payment at maturity might offer the principal component. Market availability strips are typically offered by financial institutions, brokerage firms, often based on underlying treasury instruments. All right. So this is all about the strips. Now I'm giving you a question with respect to this strip concept, and I want each and everyone to answer this particular question in the comment section. In the comment section, even if you know the answer, okay, but still I want everyone to move on your fingers, okay, and just write A, B, C, D, E, whatever be the answer. Which of the following is not the criteria of state government securities to be eligible for strip under the RBI guidelines? You need to answer into the comment section, right? So that's all for today, my dear students. And at last, we have the RBI mentorship and test series program for 2025. If you want to enroll into this session, you can enroll it now with just rupees 2,499. All right. And in this mentorship and test series program, we are going to provide the complete coverage of your course by your syllabus, means for phase 1, phase 2, okay, and obviously the interview guidance programs is there in this, in just 2,499. okay, each and every topic will be are being completed in this course, providing with PDF materials, means notes. You can download the PDF materials, take out the printout. Video lectures are being provided. And there is no restrictions to watch those recorded series. You can watch it multiple times till you understand it. All right. And even if you face any sort of issues, then you can contact to our mentors. Mentors numbers are being provided to you once you get enrolled into this course. And along with these facilities, you are going to get test series for phase 1, for phase 2. Okay. Test series, 10 to 12 test series will be provided for phase 1 as well as phase 2. Okay. And obviously the interview guidance. And the most important part of this course is current affairs weekly analysis session. In this, we used to analyze through the newspaper. Okay. Through the newspaper, we used to analyze the important articles with respect to ESI, with respect to finance, with respect to management. All right. So through this weekly analysis, you will get the benefit. And in this session, we used to show you that how you can use your current affairs knowledge in your answers. If any question, you have to write any questions in phase 2 examination. And we also used to frame the questions from this weekly analysis for your phase 1 examinations. All right. So that's all for today, my dear students. Thank you very much. Have a nice day. Bye-bye. Take care. See you soon.